It's Welcome to the Resolution.
Hi Jay, here today talking about expats and non-filing expats, I guess specifically, right?
Yes.
So, I don't know how we want to do this. Maybe what I was kind of thinking is maybe I could pretend to be an expat and kind of go from there.
Sure.
With somebody who's got some issues. So I'll just pretend I'm coming to you.
Sure.
Calling you up and saying, I've been overseas, got a job over here, been over here for 6 years. I just realized this year talking to a colleague that I still have a filing obligation as an expat, as a U.S. citizen. I had no idea.
Right.
What do you do in that situation?
Right. Very good. Yeah, so we'll drill into this a lot of different ways, but ultimately, if you aren't a business owner, and I guess we'll segment this into business owners and non-business owners, to kind of close the door to any scrutiny, not have problems with your passport, just clear your conscience. You're going to be looking at filing 6 years of tax returns, 1040s, taking advantage of the foreign earned income exclusion, which basically excludes up to 100,000 plus income from any federal taxes. And if you're over the 100,000 exclusion, using the foreign tax credit to get the taxes you paid in foreign countries to also reduce any taxes you owe. And file 6 years of 1040s, and in most cases, not owe any tax. And also, if you meet the income criteria, take advantage of the stimulus payments that came to Americans and green card holders in 2020 and 21, an $1,800 stimulus refund in 20 and a $1,400 stimulus in 2021, which being compliant as a taxpayer gives you.
So that all still applies even overseas.
Yes. Yeah. And you might want to have an American bank account to get those deposits. But generally, as far as like somebody Googling, haven't filed taxes expat, filing 6 years should lock things up. The 16, depending on the year that you're listening to this podcast, your 3 oldest returns will most likely be paper filed to Austin, Texas, which is the international division, and the more recent 3 will be electronically filed, and that should close the door to any scrutiny. Now, if you owe money, you might owe money in 2 situations.
Yeah, what are those situations?
Yeah. So if you're high income and the foreign tax credit and the foreign earned income exclusion don't exclude enough of your income, we're talking 150 probably and north. Now, you also, like if you live in Dubai, there's no income tax there.
Yeah.
So that's one of the weird countries where you pay no income tax to Dubai, but all your taxes are paid to the U.S.
I see.
Minus the foreign earned income exclusion. Now, note, Dubai doesn't have any taxes, so there's no foreign tax credit.
Right, because you haven't been paying it. Because there isn't anything.
Yeah, exactly.
Right.
In fact, and I guess we should also add, and this might be our segue to businesses.
Right,
But let's start with just businesses like self-employed contractor.
Okay.
Right? A self-employed contractor has all of the above already applies, the foreign earned income exclusion, the foreign tax credit. The one other test that will enter the equation is if you were self-employed and living in a country that doesn't have a Social Security system, you might have to pay U.S. Social Security taxes to fund your Social Security and Medicare in the U.S. on your self-employed income overseas. Now, if you participate in a Social Security system equivalent, which is on the list called the totalization agreement, which is most first world type countries, and you participated in a Social Security equivalent to the United States, and you don't have to pay it. You basically, technically, you should attach a certificate indicating you participated in the country, and then you won't owe those taxes either.
Okay. I guess one question I have. So
Sure.
sometimes people talk about like non-willful negligence. Is that how you're filing these?
Good question. Yeah, let's segue to the business component.
Okay.
All right. Now, this conversation about businesses opens up a conversation about the Streamlined Expat Program.
Right. Yeah.
Right. Which is a bureaucracy that was created to allow expats to come out of the woods and get compliant without being overly penalized.
Yeah.
Right? And so we're Washington Tax Services, of course, international company with clients all around the world. We see a lot of cases. That's why we have this institutional knowledge and expertise to share with you. When do we do the Streamline is a good question.
Yeah.
Okay? So we're doing Streamline on one case. And that is somebody that owns a corporation or a partnership overseas,
Okay.
which is the other business that we're getting to. If you own a corporation or a partnership overseas, you have another filing requirement with your 1040, and it's called the Form 5471.
Okay.
If you own a foreign corporation or partnership, you got to file it. It's basically like a disclosure form showing your profit and loss and your balance sheet, more or less, and some details. Now, that form is highly penalized if you don't file it, like 5-figure amounts. So for that reason, as the penalties are so extreme on that, we're suggesting that those clients do the Streamline program. If you're not a business owner, this is our very subjective recommendation. You're not going to find this on a website, okay? But we're not sending just your average people that are wage earners or contractors to do the Streamline. We're just recommending that corporation and partnerships do it, and I'll package that for you. Mm-hmm. You're going to and this is another segue to FBARs and FATCAs, which we'll cover in a second. But basically, if you're owner of a corporation or a partnership overseas, you'll do the Streamline program. You'll file 3 1040s, not 6, and 3 5471s for the corporation or partnership, and 6 FBARs, and package it to the Streamline program with your attorney or accountant, hopefully us, wink, wink. And we're going to ask for forgiveness of the penalties, or in many cases, they negotiate a lesser penalty in that program. So that is our carve out. Now, somebody listening to this podcast is going to say, well, isn't there penalties on late FBARs? And here's the weird response to that. Well, we've done a lot of FBARs in the last couple of years, and not one of them has been penalized by the average individual. And so we're not flooding that bureaucracy with Streamline cases unless you have the 5471 penalty possibility. That's our judgment call that we're making as licensed tax professionals based on our experience. So, does that make sense?
Yeah, I think it does for sure, and I think it does kind of start to lead into the other issue,
the FBARs,
where you're talking about I'm set up overseas and got this life going over here, and I've got a bank account over here, and I got an amount of money in there. What is an FBAR? When do you need to do that versus when do you leave it alone? Are there any, how far back do I have to go? It sounds like 6 years. Whatever.
Very good. The FBARs, the FATCA, and the Form 3520, which I also will give information about, they're disclosure items. And let's just look at the history. They were created once Swiss bank accounts really no longer became this like secret thing. There was a political movement to stop having Americans hide assets in foreign banks,
right?
And that was the origin of the FBAR FATCA thing. FBARs are and FATCA and 3520 Form 3520, which is for foreign trusts, were created to have people be transparent about bank accounts and or foreign brokerage accounts which they might have overseas. So let's cover them. So FBARs are filed with the Financial Crimes Unit of the Department of Justice or thereabouts. You'll need to get an FBAR filer to do it for you, or in some situations you can learn how to do it yourself. We're FBAR filers here at Washington Tax. But basically, if you have a foreign bank account or an aggregate foreign bank accounts and brokerage accounts that exceed 10,000 or higher in a year, you should be filing an FBAR before April 15th, or there is I think some extensions on that are easy to get. So FBARs are 10,000 plus. If your foreign bank accounts and or brokerage accounts reach 10,000 at any time, aggregate all the accounts together.
So if I got 3 accounts.
Yes.
Got it.
Yeah, so that's the FBAR component. That is filed to the Financial Crimes Unit by your professional, hopefully Washington Tax. Send us an email. And with your 1040, this is where FATCA comes into play. FATCA is basically bigger FBARs. If you have 50,000 aggregate bank accounts and brokerages, you add the Form 8938 to the Form 1040 and disclose it in a 1040 as well. And then lastly, the Form 3520, which, by the way, you can't electronically file. 3520 is if you have ownership in a foreign trust or a distribution in a foreign trust. There's a lot of nuance to it. There's grantor trust, non-grantor trust. There's a whole litany that I'm not going to go through right now, but the 3520 is another disclosure form that is highly penalized, like the Form 5471, which also, I guess I'll say as an open conversation, if you're late on 3520s, you might also file a Streamline on that with everything.
Yeah.
And I should add one last thing. The Form 3520 requirements is a moving target. I've got a Canadian client, for example, recently that did have a filing requirement, but the IRS had sent a memo out that they don't have to report their retirement accounts in Canada anymore. So it is a kind of a nuanced form that has a long list of requirements, but also some omissions that are being added daily or yearly by the IRS. No, you don't have to file. So
I'm trying to think if there's anything else. I guess one thought comes to mind is, what if I'm overseas, permanent over there, bought a house? Mm-hmm. I've also got a house back in the States still, that I rent out, for example. What does that look for somebody who's non-filed? Yeah. Are there any special considerations that you put in for a homeowner or someone who owns property abroad? Mm-hmm. Still has property at home, or either or,
Well, so that's where it's, your tax return will often be a hybrid. Mm-hmm. Your U.S. sourced income, that is, wink, wink, rental income in this hypothetical, is going to be taxed, but your expat income won't. Like, for example, we'll say the state of California, if you're an expat that are a California resident, some states, you'll have to look at, every state has their own laws. States, but like if you have a U.S. source pension in California, sometimes you might be exposed to state taxes, and so some expats will also file a state tax return if they do have some U.S. source income, as well as pay taxes on the federal component.
Is this like a longer process? I mean, is there more burden on the individual to bring this information to a tax preparer like Washington Tax?
That's a good question. So, the IRS and the funding of the IRS and the staffing of the IRS is always in flux. In year 2022, when we're having this conversation, the IRS is starting to staff up to process a backlog in paper returns. But electronically filing is always the way you want to go. I should also add that some people listening to this podcast, they can also consider maybe filing 3 years instead of 6, all electronically. It's not a guarantee that will close the door to future scrutiny of the other 3 returns that you're forfeiting, but some people might take that path, just like the Streamline path. I mean, Streamline is asking you to file 3 1040s and 6 FBARs. The non-streamlined path, which we gave lip service to earlier in this broadcast, to close the door, you might file 6 years. I guess on the urgency thing, I mean, a lot of the people that are listening to this podcast or Googling us in the middle of the night in Spain or Timbuktu, what is real? The IRS did pass a law a few years ago before 2016 when we had a Republican president come in. When there was a Democratic president, they did pass a law that if you owe the IRS $50,000 or more, the IRS will block you from having a passport renewal.
Right, passport issues, yeah.
And I'm just giving lip service to that, just to add like what's out there to maybe be afraid of. And technically, that passport block can be unblocked by getting into an installment agreement on what you owe, filing an offer in compromise and showing that it's been filed, not even accepted, or getting the case closed for hardship. Just wanted to put in that passport piece. I'm not seeing, except in select cases, them actually revoking or confiscating a passport, but they have. Most commonly, they're blocking your renewal. That is the most common thing. But once you get into agreement, they're pretty fastidious at unblocking it. I have had a client whose passport was blocked. I've seen a few revocations, but most commonly, it's a passport renewal. So I just going down that rabbit hole since it was there.
I don't know. That seems like we've covered quite a lot. Is there anything else you can think of that might be useful or beneficial for someone who's got questions along these lines?
So we're covering the legal components of getting in compliant as we know it, the institutional components, the motivations. There's also a psychological component. You never know when laws might change.
Sure.
They might loosen, they might strengthen. For a lot of people, getting into compliance as an expat non-filer is just peace of mind. And it's not price prohibitive. WATAX will do this for you for a reasonable fee, anywhere from the hundreds to the thousands, depending on the complexity of the case. And this might be an important check mark to free your brain.
Definitely. Thanks, Jay. I really appreciate talking with you today.
Yep. Thanks, Stuart.
Look for you online to visit WATAX.com.
WATAX.com still?
WATAX.com.
Great. And send an email any hour of the day.
All right.
All right. Thank you.
Thanks, Jay.